Katie, I'm really curious about your thoughts on some of the technicals that I personally have found concerning, specifically some very strange things going on with market breadth. So last week, as I'm sure you know, there was, I think it was Wednesday, where the market was relatively flat. It was down about 0.4%, but 429 names in the S&P 500 were actually negative. And the dispersion of returns is a little bit odd right now. And we're seeing, the majority of the stocks in the S&P trading below their 50-day moving average. So when you look at that, do you consider that a buy signal, or is that something more concerning because it is such an odd trend that we're seeing?
Well, that dispersion of returns that you cite is making it a very difficult market for people to take advantage of. So I don't want to minimize that. And yet the breadth or the market participation, while it has really contracted, when you look at cumulative measures like the advanced decline lines, it really is just a pullback. We don't have a big breakdown there as of yet. You can also see that loss of breadth in small cap benchmarks like the Russell 2000 index. A pretty pronounced pullback has already unfolded there, and yet it also has support. Where it becomes more of a sort of a contrarian or bullish indication is when the oscillating measures like the percentage of stocks above their 50-day moving averages become oversold. And we're getting very, very close to that. And I would imagine even with today's action, we'll probably start to see some contrarian extremes from those overbought, oversold measures of market breadth.